morning, everybody. Happy Monday, and welcome on into a brand new week in today's episode of FreightWaves Now. I'm Kaylee Nix here with Anthony Smith.
And on this Monday show, we'll get to talk with Mike Baudendistel about the latest in the CPG community. We'll also have a preview of our SiriusXM Radio show and chat with Joanna Marsh about the latest updates in East Palestine. But first, our top story focuses on more milestones being hit by Mexico's truck producers, and Noi Mahoney is here to talk about the increase in production. Noi, thanks so much for being here this morning.
Thank you for having me.
So let's dig right into some of the numbers. January numbers in for Mexican truck imports into the United States, and again, seeing major increases.
Yeah, that's correct. Truck makers with factories in Mexico started the year really strong in January. They produced about 18,500 trucks in the month of January. That's a 26% year-over-year increase compared to January 2021. And they exported more than 15,000 of those trucks, a 14% year-over-year increase. And the U.S. Took about 96% of those exports. So we were the main export market.
And Noi, when we're looking at this increase, is this kind of coming down to backlog just being cleared, some work in process stuff really kind of being worked through as parts become available, or is it just purely off of demand?
You know, I think it's a little of both because in the summertime and early fall, there was a lot of supply chain issues, and factories were having trouble, as you just mentioned, getting parts for certain trucks. So I think some of this is a little bit of fulfilling backlogged orders. But I also think that, there's a lot of demand from U.S. carriers right now to fill, to replace aging trucks that might be in their fleets. So it's a little bit of both, backlog and new orders.
So I love that the story is coming out to see this continued increase, because we've talked a lot to Alan Adler about new U.S. truck orders from U.S. producers, and that seems kind of like they are working just through their backlogs, not necessarily on the demand. And in earnings season, a lot of those truck producers have said that as well. Those OEMs have said, yeah, we're working mainly off backlogs, and we've got more orders coming in, but not necessarily that heightened demand. What do you think the difference is between U.S. truck makers versus Mexican truck producers right now?
That's a good question. I think with Mexican truck makers, they probably had a little bit of a bigger backlog than maybe a lot of U.S. manufacturers. And I also think that, Freightliner, which is the biggest truck maker, one of the biggest truck makers in Mexico, they have such a huge market share. So maybe, they're fulfilling backlog orders and new orders, which really is boosting, they're holding up the sort of the truck makers manufacturing industry in Mexico. They're such a big player that maybe their market share is sort of holding up the industries for the past few months, I guess is a good way to put it.
And Noi, one of the stats that you mentioned was that a large majority of these trucks went to the U.S., over 90%. Is this something that's typical that we usually see in previous reports, or are there any numbers that jump out in particular for this report?
The numbers are getting a little bigger. It's usually around 93, 94% that the U.S. exports. This time it was 96%, and Canada also took about 2.4%, and usually they're a little lower. So we're starting to see more Mexican factories, trucks headed a little bit more headed to Canada and the United States. So that's a new development there.
So is this just another sign that nearshoring initiatives and reshoring initiatives back to Mexico are a good move for some of these producers, especially if they're looking to maybe cut some costs if they're producing in the U.S. and want to move it across the border?
Yeah, I think so. I think, Anthony talked a little bit earlier about U.S. truck makers and what was the difference between, U.S. and Mexican factories. And probably some of it comes down to cost. I don't know off the top of my head if trucks coming out of Mexican factories are less expensive than U.S. trucks. But I know, nearshoring is happening. And one of the reasons companies are attracted to Mexico is the lower cost of operating, lower labor. So that might play into, the price of trucks and keep attracting new factories to Mexico.
And of course, Noi, one of the big things that's somewhat of a hesitancy for some folks is talking about crime, but we saw a decrease in rail crime. Can you talk about that aspect?
Yeah, that was a little bit of a surprise. The Mexican Railway Association reported that cargo theft, railroad cargo theft, decreased 21% year over year for the first 10 months of 2022. So that's January through October. They said that there were 1,473 reports of cargo theft during that time period. And so, I know that a lot of people, I've been hearing that cargo theft is a real issue, so that those numbers surprised me. And so I went and looked at the data. And so cargo theft overall, not cargo theft, I'm sorry, the amount of cargo that moved through Mexico during that time period also decreased slightly. So I think that might have played a little bit into why, cargo theft decreased. Another reason that cargo theft might have decreased during that period was I know there was more security protocols in certain areas where, where high crime occurred. So it was a combination, I think, of those things.
So the interesting stat there is that maybe theft is down, but vandalism is actually up. Are we looking at thieves or criminals, I guess, that are maybe just slightly less opportunistic or are not willing to take the risk, but still want to, leave their mark?
Yeah, and vandalism, it's not just, spray painting, the sides of railroad cars. It also is vandalizing tracks. So it might be that we had these, organized thieves or gangs trying to damage tracks and, damage rail cars. And that also is considered vandalizing. The report that I read from Mexico didn't specify, difference between spray painting or vandalizing rail cars or tracks, but it was up significantly for the year. I think it was up, something like 20%, the amount of vandalism in the year. So that was up, but cargo theft was down. So it was some very mixed signals coming out of Mexico's rail theft.
And Noi, in our last story, it sounds like something small that could turn into something potentially big. There was a rare insect intercepted at a port. Can you tell us about that story?
Yeah, I think it was the port of Otay Mesa in Southern California, in a shipment of celery coming from Mexico. They found a rare species of sort of a caterpillar, or an insect that belongs to the caterpillar butterfly family, and this species doesn't occur in the U.S. So it was a first of its kind in port discovery for the port of Otay Mesa. Now this insect has been found in the U.S. before, but this was the first time it had been found at that port, and so it was discovered. The shipment of celery and the driver were sent back to Mexico. That's protocol for when they discover these types of invasive species. So that celery never made it to the U.S.
It's interesting. I don't know if you would know this off the top of your head, but just kind of anecdotally, do you know how many shipments are turned away or sent back for reasons like that every year? Like, is there a number? Is it pretty high that we see?
I don't hear off the top of my head. I don't know of a lot of shipments that are just turned around and sent back to what their place of origin. That's a really good question. I don't think it occurs that often because that leads to a lot of loss for that shipment or that company that needs that shipment or the carrier that's carrying that shipment. But that does sound like something I should look into for a story idea. You gave me another idea right now.
There you go. Awesome. All right, Noi, thank you so much for joining us this morning to talk about this. Have a great rest of your day, and we'll catch you later.
Thank you so much.
Right now, we're going to head over to the wall for our first carrier update of the morning.
Welcome to our first carrier update of the day. Bill Priestley and Donnie Gilbert here. And Donnie, looks like we're going to be talking fuel.
Yes, so I'm kind of a little bit surprised, but thank goodness diesel fuel is still going down. I was worried this little green line here where it peaks out. This is our rack price. Rack started to turn back around, that gap can narrow very quickly on our spread to where fuel stations get nervous and start pushing their rates back up. We saw it kind of hesitate here just a little bit, only came down about a ½ cent one day, and I'm like, well, there we go, it's going to flatten out and then start going back up. Well, it didn't. Actually, two things have happened. Diesel fuel retail has kept going down, and the spread has actually widened a little bit further. So diesel fuel down to $4.54, Bill. We're working on it. It's a couple of cent to a couple cents per day. It's going to take a while. But here in Chattanooga, I'm starting to see more stations now, $3.89, $3.99, getting below that $4 mark. Now, these are regular retail stations. There is one truck stop in Chattanooga. It's Russell Boulevard off I-24. They are down to $3.99. So I do see one truck stop in here. I know a lot of times your truck stops are a little bit more expensive than your regular fueling stations, and that's why I got to be careful when I say that. Yeah. But there is one truck stop down to $3.99. About how to wreck getting in there. That's when I saw that. But it's happening. So fuel prices are coming down. There's still some areas, obviously the West Coast and the Northeast, where fuel prices are extremely high. But this will still kind of give a little bit of relief to them as well. Look at the next chart here. This is where I'm showing you the spread. This was my concern. I saw rack price go up and fuel prices continue to come down, and this spread dropped about 13 cents overnight down to about $1.40. Now, this is still fine with an operating range, but when it starts getting down here that $1.10, $1.20 mark, that's when stations are going to start pushing those prices back up, and that can happen very rapidly. But we reversed and both kept coming down, and the spread came back up to 161. So we're still in a very healthy area to keep fuel prices headed in the downward direction. Now, obviously, I wish it was a lot less, and I wish this was about $1.20. If we could go back to those days when it was $3 a gallon and it was $1.90 on the, that'd be great. But maybe in 6 months we'll get there. All right, let's check out some spot rate prices here. Go to the next chart here, and I've got our NTI, the daily report, which is what is actually happening every day versus the average. And you see the ups and downs. It's obviously been trending downward, but now the peaks are getting where the troughs were. And we saw it down into the 30s. So we're still heading in that direction. We still got a lot of volatility in it. It's going up, down, depending on Thursday. Mondays might be, Mondays could be tough if you're having to cut a lot of freight that was failed over the weekend. But Tuesday, Wednesday, prices can go down, then it starts picking up Thursday and Friday. So we see those ups and downs, but they're still trending downward. Our actual average for our NTI is 241. It's expected to be able to drop down, it could drop down another 10 to 15 cents over the next 30 days. So, and it seems to be headed in that direction. There is nothing to really come back and tighten capacity up on the spot market that would push those rates up. You can see here, comparing to our Reefer initial contracted rates, it's very close. The difference is Reefer's at 245, spots was at 240, but the average is 241. So it's just right above it, except this does not include fuel, where the spot rate at 241 does include fuel. So there could be another 70 cents added on that. That's why everybody's falling back and taking all these contracts. And now less freight's hitting the spot market, which is, again, allowing rates to still be pushed down.
All right, thank you very much, Donnie. Let's move over to Kaylee with our first check of headlines.
Starting off with the first check of your top stories this morning from FreightWaves.com. U.S. lightweight parcel volumes have fallen off significantly since the pandemic's highs, but DHL's e-commerce solutions forecast that volume will still remain 20% higher than they did in 2019. DHL laid out 4 main trends in its report, including consumers making shipping costs a top priority instead of shipping speed. They also highlighted the importance of increasing real-time visibility in data analytics spending. DHL said that more merchants will look at regionalizing their demand and adjust their shipping and inventory management strategies accordingly in order to reduce transportation costs. Daimler Truck is conducting a third safety recall of about 77,000 vehicles across 7 model years in the United States and Canada due to brake module corrosion that could cause pulling of the vehicle to one side of the road. In total, more than 475,000 units have been recalled, but none of the recalls have an associated crash so far. Less than 1% of the recalled models are likely to have the condition, but those include the 2022 Freightliner 114 SD, the 2017 to 2023 Freightliner Cascadia, and the 2022 to 2023 Western Star 47 and 49 X Series trucks. And Egypt Air has taken delivery of its first Boeing 737-800 series cargo jet following a conversion from passenger configuration by an independent supplier. The company is now considering a new business arm, rebuilding the aircraft type for dedicated cargo at its own maintenance repair facility. The first conversion kit was designed by Miami-based Aeronautical Engineers, Inc., completed by Commercial Jet. The new configuration can hold 11 full-height containers and a smaller unit on the main deck as well. And you can find those stories and more by heading on over to FreightWaves.com. If you're watching us on YouTube, don't forget to like and subscribe to stay updated, and head on over to tv.freightwaves.com for the full FreightWaves experience. We're going to take a quick break, and we'll be right back with our first check of weather, so don't go away. The 2023 Freight Tech 25 list is filled with meaningful innovators from across the industry who are helping shape what the future of supply chain will look like. Check out the full list of these companies and all the latest Freight Tech news at FreightWaves.com.
From the truckload quoting page within TIE-TMS, you can create a new shipment to instantly display your historical lane average alongside all of the market-leading rating intelligence tools. In just a few clicks, you can adjust the quote, add your margin, select your quote response template, and email an official quote right off to the customer from the same page. Request a demo today at tie-software.com to find out how TIE-TMS can optimize your quoting process.
Welcome to Drilling Deep. I'm your host, John Kingston. Drilling Deep is the place where we talk about oil and we talk about diesel, and you have to drill to get oil and you have to get oil to make diesel, so that's why we call it Drilling Deep. Drilling Deep drops every Friday on FreightWaves TV and all available podcast platforms.
Welcome back to FreightWaves Now. It's time for your first check of weather on your Monday morning. We're watching our next round of pretty heavy snow set up across the northern Great Plains and into the Mountain West. With that, expecting some pretty impressive snowfall rates once again. Let's check it out in Sonar Critical Events. Basically, the mountains all the way from the Idaho area down through Wyoming and into Colorado have pretty much been slammed with snow this year so far, and they're expected to get another round of heavy snow here today and into tomorrow. Because of that, we do have winter storm warnings in effect all the way through central and eastern Montana. The whole state of Wyoming is underneath a winter storm watch right now, with the exclusion of the I-80 corridor between Rock Spring and Rawlins, because they have a blizzard warning going on right now. And then down into the mountains of Colorado and through I-70 up to Utah, winter storm warnings also in effect there. What I want to focus on is that blizzard warning that's in effect between Rawlins and Rock Spring, because this is the I-80 corridor there running east to west through the southern parts of Wyoming. This is going to be tied times where visibility is going to be 0 miles. So if you are driving through here, just be super careful as you're headed through. Make sure that you're paying attention to what the weather conditions look like. Just pull over if you lose that visibility out there. High winds, they're going to be about 40 to 60 miles an hour at some points in time, so could also be seeing the potential for rollovers. What this looks like right now on the radar, we're watching the snow start to develop from the north, and it's going to move slowly to the south-southeast, pick up some more steam, some more moisture, and interact with that cold air, leading eventually to those blizzard conditions for that I-80 corridor. Same thing as you move down into the mountains of Colorado, high wind warnings there as well for sustained winds about 40 to 50 miles an hour with stronger gusts also. So just time to be careful if you're headed out through those high plains. This storm will continue to materialize and develop, possibly bringing some winter weather once again to the Midwest by the end of the week. But we'll talk about that coming up later on in our next checks of weather. Right now, we're going to toss things over to Isaiah Buchanan. He's got our first check of what's trending on social media this morning.
Welcome into Social Roundabout, everyone. I'm Isaiah Buchanan, and this past weekend there were a lot of really cool things that were happening, including a new theme park being open with one of the most beloved characters of all time. Super Mario World out at Universal Orlando is officially open, and take a look at what you can do if you take a visit out there.
Guess what? Super Nintendo World at Universal Studios Hollywood is now open. From giant piranha plants to meeting Mario and Luigi,
it's nice to meet you.
You're truly immersed in this video game world. It's one of the most dynamic theme park lands filled with tons of kinetics, superb theming, and it's super interactive. Mario Kart Bowser's Challenge is one of the best interactive dark rides you'll ever experience. With elaborate physical sets and animatronics, the ride is all tied together with groundbreaking AR technology. It is so much fun, but video does not do this ride justice. Toadstool Cafe is filled with deliciously themed food, but you need to try the Luigi Burger and the Mount Bean Pole Cake. You'll thank me later. Plus, with a power-up band, you can really level up your Nintendo experience. You can collect all the coins, play the 4 Key Challenge games, then even get an opportunity. Super Nintendo World is where it's at.
Everything about that park looks absolutely amazing. And now, if you don't see me for the next week or so, just know that that's probably where I'm going to be. That's all I have for this edition of Social Roundabout. But coming up in our next tip, we're going to talk about why you don't take beer from football fans. So stay tuned for that. Now I'm going to toss things back over to Kaylee and Anthony.
All right, Isaiah, thank you for that update there. What do you think about new theme parks?
I'm all for theme parks, yeah. Okay. I haven't been in a while, so I'm overdue.
Okay, Anthony's a theme park guy. You know, we can put that to the test. Future supply chain?
That's right. I heard Ohio has, what is it called?
Sydney would be really upset with me right now, but I am blanking on the name. But it is like one of the best places to go ride roller coasters. We're going to put that to the test.
Yes.
Sid, I'm sorry that I can't remember this right now. Whatever. Right now, we're going to welcome in our next live guest. We've got Adam Perlmutter joining us from Metafora to talk a little bit about building a bigger brokerage. Adam, thanks for being here, and let's dig right into it.
Good morning. Thanks for having me.
Good morning, Adam, and it's great to have you on. And so when we're looking at really being able to build a bigger and better brokerage, we're going to be some of the first things that you look at on a headline item basis.
Yeah, when building a brokerage or trying to grow a brokerage, actually, we see a lot of missteps along the way. It's a hard business. So probably the most common thing that we see is not having a plan in place, taking an approach, sort of like a figure it out mentality. And the most common areas we see around that are really scattered across the business: sales, tech, capacity, strategy, every aspect of the business.
Totally understandable. And it's sometimes brokers or brokerages walk into their growth, their like growth initiatives without necessarily a plan, right? Like they're just like, okay, we're going to throw a lot of money at either new systems or hire new employees and just hope that we see that organic growth coming out of this initiative without a roadmap, right? And that strategy doesn't always work. You might see it's kind of like a fad diet, right? Like you might see the initial increase and then it goes back to where you started.
Totally. Yeah, and it goes back to that figure it out mentality. What we see, especially pertaining to sales, is like having a defined go-to-market strategy, and you want to stick to the core services that you provide. So if you do dry van temp control, don't go chasing after a flatbed opportunity. As you alluded to with the roadmap, especially pertaining to technology, have a roadmap with sequencing of initiatives and timelines. You want to revisit that regularly to align with your business goals, and know what tools are out there and available to you, and evaluate them based on what makes sense for your business. Don't get distracted by functionality that may be cool to watch in a demo, but it's not necessarily applicable to the business. Also, implementation is key there.
And Adam, I think that's great. So we're talking about how to really mitigate some of these risks, because what are going to be some, for example, things that you can do to really kind of mitigate risk around capacity? Because I can only imagine when we're looking to grow your brokerage, you're looking to just bring on as many people as you can and really just grow your book of business as fast as possible.
Yeah, I'm glad you asked about this. Capacity strategy is what I'm most passionate about, coming from the carrier side of the business. So when it comes to capacity strategy, you want to make a real intentional effort to prospect strategic partners where you run high volume lanes. And you want to find carriers who match the lanes that you run and have a need for those lanes in their network. What you don't want to do is just post up all of your loads, book a bunch of transactional carriers, and then a bunch of people would say, like, we have working relationships, but they're actually just made up of transactional carriers who have called in over the years. So there's a time and a place for those types of carriers, but the core capacity network should be made up of carriers who need the lanes that you're running.
Oftentimes, I think to really get into that type of capacity strategy, you have to have your brokers, your talent on the floor who is alongside that mindset. But I think you find a lot of times the mentality in a brokerage is, okay, let me just post up this load for the cheapest rate that I can get. That way I'm making the highest margin, right? How do you get that mindset switch to happen? Does that come from a leadership standpoint first? Is it that just the talent that you're attracting, you really got to make sure that they're on board with that same type of strategy?
It starts with training, for sure. It sets your people up for success. It drives the right behaviors. You want to let people know on the floor that it's not just about getting that quick book, as you mentioned. It's more long-term incentives. You want to take a look at compensation, for example. Make sure that you're driving the right behaviors and that are contributing to long-term business goals, and not just like the instant gratification of booking a quick load, moving on to the next one. You want to build those long-term working relationships that are mutually beneficial.
And Adam, when you're looking at really kind of being able to scale, what are some tips that you have around that? Because I can only imagine, you have your foundation, it's solid, but it has to be something that you can really kind of grow off of, right?
Yeah, absolutely. So we really like nearshoring as a solution to scale the team. It really provides you the flexibility to act as an accelerator, to grow the team at a very competitive cost. In the last 5 or so years, there have been nearshoring solutions that have popped up that have specialty niche areas, specifically in transportation and logistics. So it's not just acting as a call center, but really an extension of your team. So in a volatile market, it gives you the flexibility to scale up or scale down depending on what you need.
I think that's really fascinating. You think of partners like Lean Solutions, who of course you guys work with super closely there at Metafora, to be kind of that nearshoring partner, right? And almost not necessarily an outsource of your business, but it is that extension arm that's there when you need it. How do you know when it's the right time to start looking for those partnerships? Or if you need to maybe focus a little bit more on your talent and development in-house before you look outside?
That's a great question. So I'd say you want to have that plan, going back to the top, making sure that you have that roadmap of initiatives and in advance to try to be as proactive as possible when you're going to look to grow, when you're going to look to scale, and have those KPIs in front of you that act as scaling indicators. So as you onboard the next couple customers and you anticipate hitting a certain revenue inflection point, that's when you want to hit the switch, perhaps start to scale the team with a nearshoring solution, but you want to try to be as proactive as possible. I know it's tough to predict the market, but forecasting, revisiting frequently, staying close to your roadmap, all are tools that you can use to help make that decision.
And Adam, I'm glad you mentioned around different markets. So when you're looking at really being able to scale and grow, do you have different approaches depending on what kind of business cycle we're in?
Yeah, the market's ever changing. And so as a third party, as a brokerage specifically, that's typically where brokerages make their money at, when they can educate their clients in a changing market to let them know, hey, here's what's out there, here's what it's looking like, here are capacity conditions, and we can help you in this way. Again, you want to stay true to your plan, to your roadmap, and you want to just do the right thing. You want to create those long-lasting relationships, and whether it's a bullish market or a deflationary market, you should be able to stick to your plan and execute.
So going the opposite way, if you're a brokerage and maybe you bit off a little bit more than you can chew, you grew really fast when you were in an up market and we're in a deflationary period now, and you're sitting here and you're like, dang it, we overcommitted, we hired too many people, we brought on too many new customers, and you need to walk it back. What type of strategy advice do you have when, of course, nobody likes to say, hey, we got to pull back and pull out of this a little bit, but what type of strategy do you have to maintain your relationships while still being honest about what type of service you can provide as a brokerage, knowing that maybe they overextended themselves and they just can't do it anymore?
Yeah, the number one service offering for brokerage is non-asset based is communication. You have to be transparent with how things are, how you're buying, what sort of trends you're seeing in the marketplace, and that's what builds trust. So again, if it's deflationary, if times are slow, you just want to be transparent with that communication and really build trust with your clients, and that will help get you through really any sort of market conditions.
And Adam, when looking internally, what are some things to keep in mind when really looking to not only grow but retain, because that's also going to be a big factor as well. I can only imagine training and different types of transparencies and goals can really be important here.
Yeah, you mentioned it. Training is key. A quick shameless plug here, check out Sync Logistics Training. We've been talking about it through the last few segments with you guys, but really key to upscale your people, set a higher ceiling for them, and that really helps with retention if they know that you're making the investment into their growth. And also, it's a smart move to get help from experts in areas where you're not confident. Generally, in brokerages, people come in with a bit of a sales tilt or a capacity tilt, and no one's really an expert in all facets of the business. So it's a good move to get help from people or businesses like Metafora if you're not confident in a certain area of your business.
And Adam, speaking of shameless plugs, you guys have a podcast that you put out at Metafora on a regular basis. Talk to people a little bit about where to go to find that.
That's right. It's called the Extra Mile Podcast. You can check us out. We drop episodes monthly where we cover topics such as this, among a bunch of other important trending things in the industry. So feel free to check that out. We're on everywhere you can find your regular podcasts.
Awesome, Adam. We'll have to check that out. And thank you so much for joining us this morning. Been great having you on.
Thanks so much. Take care, guys.
All right, we're going to go ahead and take a quick break. We'll be right back with more FreightWaves Now, including Mike Baudendistel's here for his weekly community segment, so don't go away.
From the truckload quoting page within TieTMS, you can create a new shipment to instantly display your historical lane average alongside all of the market-leading rating intelligence tools. In just a few clicks, you can adjust the quote, add your margin, select your quote response template, and email an official quote right off to the customer from the same page. Request a demo today at tie-software.com to find out how TieTMS can optimize your quoting process.
Like F3, we know what they want is a chance to show off their products, their swag, and make new partnerships that will last until our next FreightWaves event.
But the problem is there are so many industry events, it can be so hard to find the right one to invest your time and energy in. We at FreightWaves take your investment seriously.
Which is why we brought together thousands of industry professionals in one city over 3 days to showcase all you have to offer.
Because your successful connections at an event like F3 move all of us forward.
Don't believe us?
Join us in June.
Hey everybody, this is Thomas Watson, enterprise trucking carrier expert here at FreightWaves, telling you about my show, Loaded and Rolling. Now, it involves trucking topics for large carriers and even small ones that wish to be large. Anything that impacts trucking, you can get it there. You can catch us every Tuesday at 1 p.m. Eastern on tv.freightwaves.com. We do it live.
And welcome back for our next carrier update. Bill Priestley here with Donnie Gilbert, and we're headed to Reefer.
Yes, so we're looking at refrigerated volumes and rejection rates. Here in blue, these are the volumes. Yeah. This is ROTVI, so it's for the USA. And Bill, you can see since we kind of got through the new year, we started January, we finished January with right around close to the same if you take it from about right here after our, this is our rebound from the holiday 7-day. So we were just below where we started at, but it dropped down quickly. But since then, we've kind of been on a steady decline. Not a lot, but we dropped from about 1450 down to 1350. So we've lost about 100 basis points. So slight decline in volumes as we roll forward. But the big story is Reefer has dropped to 4.20% in rejection rates. And again, that's because of the deteriorating market conditions and the higher fuel prices. Let's go to the next chart here right quick. Let's see if I brought this. Yes. All right. So last week I said something, and I'm going to correct myself. Okay. We're at record lows. Yes, we are still at record lows, but I didn't realize when the economy shut down that Reefer got below where we are today. So there actually is one spot in our history that we are below 4.20%. This is an extraordinary event. We should discount it and not count it. If we don't, then we are actually what I was discussing. And that's what I was trying to think of. What about that tough year of 2019? Well, here it is. We never got below 9%. And that was a year similar to what we are now. But now we have similar conditions to 2019, but we have fuel prices that are almost double. And what has that done? It's pushed our rejection rates down to 4.20%. And that's why we have kind of two things really affecting our rejection rates right now, when normally it's just what's going on in the spot markets. Now, what's going on in the spot markets is different. With all the major carriers on auto accept, there's less freight going to the spot market. But if you're lucky in a Reefer, you can also run a little bit of dry van freight. But with that situation going on, it's pushed spot market rates, as we just showed you, well below, almost 70-cent difference between spot market and contract. Well, what are these shippers doing? These shippers could go to the spot market and save a lot of money, but they're actually trying to be smart, I believe. If they do not give their contracted carriers freight at those rates, then when the spot market will turn around and bounce back. If they push their carriers away and go for the big discount on the spot market, then when it flips and rebounds, those carriers that have been running their freight on the spot market, they're not going to stick with them and give them good rates. They're going to jack their rates up. They go back to their other carriers that were contract, they're not going to help them out either. So these carriers are really trying to help out, and I believe stick with their carriers that they've signed up to run their freight on a regular basis at a contracted rate. They probably work with them, talk with them. If the market flips and goes up, they're going to hope they keep running that freight. And if the carriers are smart, to a degree, they'll run a high percentage of that freight. So they're trying to work out that mix of what do they do. Now, brokerages, I'm sure they're taking advantage all they can of
Yeah.
those discounted rates. They're trying to book their loads right now at the contracted rates that they have, and they're trying to run down to the spot market, which could be a very big discount for them.
How do you think that's going to affect the overall in terms of rejection rates? Obviously, we're at historic lows at this point, but how will that change over the course as that market, hopefully in the near future, starts to flip?
So right now, there's nothing telling us who, what, when, or where that market will flip.
Yeah.
So rejection rates are going to stay low, even though they're pushing freight to the spot market a little bit. There's not enough to cover the supply of trucks on the spot market. So they're getting hurt right now. It's going to take a pretty big swing at something to start making that flip. We have to lose a lot of capacity or gain a ton of volumes, one or the other, to tighten up that difference between the supply and demand. And then we'll start seeing probably changes in rejection rates first. Let's go one more chart here real quick. Tender lead times, we see something happening. We see tender lead times getting extended slightly. This would tell me if I'm a reefer carrier, I would try my best to be pushing my prices back up. Is it the holiday weekend? I don't think so. This holiday is not one that shippers are really closing or receivers are really closing for President's Day.
Yeah.
So something is going on. Keep an eye on this. Something's causing some issues with the shippers on the shipper side. And if I see this as a carrier, I'm going to try to be pushing those rates up. I might have to negotiate a little bit more than I want to, but still try.
Absolutely. Good stuff there, Donnie. We'll move over and rejoin our CPG community coming up here next.
Bill and Donnie, thank you for that carrier update. It's Monday, which means that it's time to highlight our Stockout Community with Mike Baudendistel, our CPG expert here at FreightWaves. Mike, you are the writer and the host of the Stockout Show and newsletter. Let's talk a little bit about what's coming up in your show today and what's hot in the CPG world right now.
Yeah, so I think one of the big topics right now is where do CPG retail prices go from here? And you sort of look back the past couple of years, well, really CPG prices are about 15% higher on average for a lot of the categories versus where they were, at this time last year. And then even those prices were, in some cases, double digits higher than where they were the previous year. So you're thinking about a lot of these CPG products, 20 or 25% higher price than they were 2 years ago. We know that a lot of these commodities that are used as ingredients have come way down. Like, one of the big ones has been wheat, which those prices have come way down to where they were before the war in the Ukraine. So really sort of the question is sort of where do prices go from here? And there seems to be a lack of consensus, really. Looking at what some of the big companies have said. Last week, Kraft Heinz said that they'd stop further, price increases after going through a few rounds. Pepsi said something similar. There was a really interesting quote from the CEO of Edgewell Personal Care, which makes Schick razors, among other things. And they said that it's going to be very difficult to pass further price increases onto their retailers. And they were speaking about Walmart and said that the consumer goods company is going to have to come to a Walmart with a really good reason that they want a further price increase. Some ingredient material that's higher. They're going to demonstrate that it is higher. So that was an interesting perspective. We probably saw the news the other week where Whole Foods reportedly had a virtual summit that told its suppliers that they're going to start expecting price cuts. Now their supplier base is a little more dispersed, not weighted towards the national CPGs, but that was an interesting comment. And so you have a few votes there for not having any further price increases, but a number of these big heavy hitters in the CPG industry are not on board with that. So just also heard from Nestle last week. I mean, they didn't say too much, but they still said that their sales growth this upcoming year is going to be 6 to 8%, and they say that's going to be, quote, pricing led, which I don't know if that means 6 to 8% price increases on top of what it was last year, which was 8%, or if it's even higher than that. And, they're expecting some volume degradation, but they say they still have, catch up to do on recovering their costs, which is a theme that we've heard from a lot of the CPGs, that their costs rose. they increase their prices, their costs rise faster than the retail prices. They still have some catching up to do to get to the targeted margins. Unilever said that we're past peak inflation, but not past peak prices. So still have some price increases. So that's similar to maybe the overall CPI off of its high level, but still rising high. Went from, I think it was high at 9%. Now it's 6%. Still a lot of inflation there. So you do have some of these companies. Treehouse Foods said something similar where their costs are still rising. Mondelez said their costs are still rising. Coca-Cola said their prices, they still expect those to rise. Treehouse Foods said something interesting where they said, well, the traded commodities that are so visible, like the wheat that I mentioned, even though those have come down, the non-traded expenses, things like packaging costs, labeling costs, labor, those type of things, those are still rising.
So, Mike, of course, we're hearing some of these stories like CPI you mentioned, PPI also, it actually ticked up in the most recent release, showing that there might be some more rises for consumers potentially. And you hear companies like Nestle say, hey, we are maybe expecting some, increases a little bit later on. But when you're looking at retailers kind of starting to push back on some of that, does this kind of put some of the companies in a hard place of maybe shrinking some of their margins? And if so, are they sitting on enough profits from the last couple of years here, or were they never really able to pad their pockets too much here?
Well, most of them really had a lot of margin pressure the last 2 years, where their costs rose a lot faster than the price increases. So they were hoping to get some of that back when the commodity costs came down. The prices tend to be sticky for a lot of these national branded products, and that would make up for a lot of the margin shortfall. Now, most of those big companies I mentioned, those are really sort of cash cows. I mean, they're just really sort of safe companies. Their volumes only move so much. A lot of them are just huge, cash generators, even after paying large dividends. I mean, they're the type of investment that if you're just a buy and hold investor, you can feel safe, owning a lot of those companies. But I do think there's going to be more strain between the retailers and the CPG companies. There was a sort of a funny story from the UK retailer called Tesco, which I had not heard of before, but they had a certain falling out with certain suppliers over price. He was on a show or interview, and he said that the consumer goods companies were gouging consumers over their price. That really caused a lot of those companies to get upset, and I guess he's not carrying some of the products that he was. So I'm not expecting those type of things to happen with Walmarts of the world, but you could have stories where there's certain changes to product placement or not ordering as many of a certain product as they normally would because of disagreements over price.
Is this at the end of the day really going to be kind of like a battle of wills and almost an ethos battle between retailers and people who are in charge of making inventory decisions at those retailers versus the CPG companies? Like, it seems like that would be kind of the breaking point, right? You take that example from Tesco in the UK, is you've got your retailer who's just saying, okay, you know what, I feel not necessarily bad, but my ethos doesn't want me to keep charging these prices for consumers, and the CPG company saying, well, we're not going to budge.
Yeah, I mean, there's a lot of different things that the retailer could do. I mean, they could, have fewer, promotions. They could just, promote their products, make their products more competitive or more at a better shelf space or something. So there's a lot of sort of levers they can pull there. But it is going to be interesting to watch. I mean, I do think that the retailers, as concentrated as they are, I mean, they really do have a lot of sway in terms of how those prices ultimately shake out. But those national brands, they don't seem to be interested in cutting the prices.
And Mike, have there been any talks from some of these companies around some of the other costs, for example, labor, if that's been a high input, or if they've been able to implement any kind of course, capital improvements to increase technology, or is this even a talking point here?
Yeah, it's certainly a big concern. I mean, there's been a huge shortage in having labor for a lot of the consumer goods companies. Some of them are making big pushes into automation. One of the biggest ones has been Tyson, which they've really struggled with having enough people the last few years. I guess probably sounds like a pretty undesirable job, but they have a lot of creative things. I mean, not just having more automation, but they're doing things like arranging transportation for people who didn't have transportation, arranging like on-site childcare for people that needed to watch their kids. So they are trying to come up with some creative things to alleviate the shortage there.
All right, Mike, it's interesting to continue to see how this develops in our inflationary state. For the Stockout this afternoon, we've got the show coming up at 2 o'clock. What's up on the show today?
Yeah, really just going through a lot of the earnings that this came out in the last week, and upcoming on future show, I'm going to have someone who does supply chain for Dumatuk, which is a company that makes a product called Incredo Sugar, which is a way to make food taste just as sweet without using using way less sugar, using this high tech process that I have a hard time wrapping my head around the technology. But that's a theme for the Stockout, because that's really one of the faster growing areas of consumer goods is the healthier products. Those are products that consumers are willing to pay a premium for, and you can see that those have been some of the faster growing segments.
Awesome, Mike. Looking forward to that episode, and thank you so much for joining us this morning.
Okay. Good to see you guys.
And of course, you can catch the Stockout this afternoon, 2 o'clock, right here on FreightWaves TV, or head on over to freightwaves.com/newsletters to get subscribed to that one and all of our community's newsletters as well. We're going to take a quick break, and we'll be right back in just a few minutes.
Welcome back to another edition of Check Call. Check Call. Check Call. Check Call. Let's go. Nobody works for free, so why should we be expecting our drivers to? Okay, let's just get it together now. What are some of those proactive steps that you can start taking now? For myself, I would like the Earth to still be here for a little bit longer, but is a hot dog a sandwich?
Oh, okay. Is pizza an open-faced sandwich? It's bread.
I have been ready for this question. I've seen the show.
We're all in this together.
Thanks for making me hungry. Now I want a hot dog.
You're welcome. Catch episodes of Check Call Tuesdays at 12:30 on FreightWaves TV. Keep up with all things Check Call on freightwaves.com/checkcall. See you on the internet.
From the truckload quoting page within TIE-TMS, you can create a new shipment to instantly display your historical lane average alongside all of the market-leading rating intelligence tools. In just a few clicks, you can adjust the quote, add your margin, select your quote response template, and email an official quote right off to the customer from the same page. Request a demo today at tie-software.com to find out how TIE-TMS can optimize your quoting process.
Welcome back to FreightWaves Now. It's time for our second check of the weather this morning. We've got a very spring-like week coming to the south and the southeastern parts of the United States. Temperatures well above average, getting into the 80s and even some 90s for some folks down in southern Texas. Overall, looking at a very nice week after we finish out this little spat of cold here. So let's check it out in Sonar Critical Events. We've got our forecast temperatures up. These are our highs for the next 24 hours to 2 days. So tomorrow on into Wednesday, temperatures breaking well above their seasonable averages for this time of year. Typically, we should be sitting like right about mid-60s, low 60s for the end of your February. We're going to be getting up into the 70s across the southeast, down into the 80s along the Gulf Coast. This is just for tomorrow. We're going to be getting more of a warm-up as we move into the latter half of the week. Down into Texas, San Antonio, down through the Texas-Mexico border, expect to see high temperatures between the mid to upper 80s into some low 90s. 90s. Same thing out across the western half of Texas as well. So we see this area of high pressure move on in. Some warmth, and some extra moisture pulling in as well. Not quite looking at those humid levels of summer, but definitely an early spring warm up for us across there. Further up towards the north, we can see that next spout of cold air, which is attempting to make its way down to the southeast, but because of that winter storm that's developing throughout the mountains, that cold air is going to be blocked from being across the southeast here for this week. Our next shot at getting back cold again will be the first week of March. So other than that, maybe break out your gardening tools. Time to start planning your springtime garden or get ready for that. Allergy sufferers like me, next few days are not going to be friendly to you. So sorry to report that. That's it for our look at weather right now, but we'll go ahead and continue to talk about that coming up in our second hour of FreightWaves Now. We're going to toss things back over to Isaiah for our next check of the social roundabout.
Welcome into Social Roundabout, everyone. Looks like I'm going to be needing to get me some Claritin on the ride home this afternoon. Well, the XFL kicked off over the weekend. There were 4 games, and one of them was the Washington Defenders taking on, I believe it was the Seattle, no, that's not the Seattle Sea Dragons. I'm actually not sure which team this is. Either way, their fans are very dedicated to drinking beer and creating a giant beer snake, and it got taken away from them. And look what happened when they did that.
As lemons are coming on the field. What this crew is upset about is they have a tradition here amongst Defenders fans, and that is they make a beer cup snake out of their empty beer cups, and the stadium security took it away from them, so now the fans are revolting.
It looks like it's lemons.
The fans say, give us our beer snake back and we'll stop throwing lemons.
When life gives you lemons, you use it to get your beer snake back. Now, going across the pond over to the UK, they had a lightsaber championship over the weekend. There were some people that gathered together and did an event that's kind of like, it looked like a lot like fencing, but they used lightsabers instead. Like, look at this video right here. I mean, they have a little circle that they have to stay in. I believe there were 2 rounds of qualifiers, and then the top 8 from those qualifiers went on to the championship round. One of the men that won it says that you have to be very precise with your moves. So honestly, this is really cool. I like this setup that they have going on over here in the UK. I mean, that's really impressive too. I mean, it's basically, like I said, just fencing with lightsabers. I thought that was really cool. I saw that over the weekend and wanted to share that with you all. That's all I have for this edition of the Social Roundabout. Kaylee, Anthony, would you guys ever do a lightsaber battle?
I think I would absolutely destroy Isaiah in a lightsaber battle.
Is this something where I have to have an appreciation for it from watching the Star Wars videos?
Yeah, well, I don't even know, because I think lightsabers are cool, right? Like, you could like,
Okay, because I have no surprise. I'm like maybe 3 or 4 movies behind in the Star Wars series.
Okay.
So.
It's all right, we can forgive that one. All right, Isaiah, thank you for that. We'll talk more about social media coming up later on in our second hour. Anthony, tomorrow, the first day of our biggest virtual event of the year.
That's right. So that's Global Supply Chain Week. And if you're worried, oh man, I haven't registered yet, don't worry. There is still time, and it is absolutely free. You can go over to live.freightwaves.com, and there's going to be something for you throughout this event if you're in any way involved within the supply chain.
So day 1 starts off tomorrow morning live at 9 a.m. with our Maritime Day. Super excited to have some experts there. We will also have a 30-minute slot of FreightWaves Now tomorrow morning, so make sure you stay tuned for that. And hey, you know what? Maybe you want to win a lightsaber. Well, you can't do it at this virtual event, but you can get registered to win some other great prizes only by getting registered at live.freightwaves.com. That's all you got to do. No purchase necessary. Just put your name in the hat. Hopefully you'll win something cool. We'll announce those winners of those door prizes at the end of each day of the week. We're going to go ahead and take a look at the last 24 hours in freight with our market update, and then we'll take a break and be right back.
event like F3, we know what they want is a chance to show off their products, their swag, and make new partnerships that will last until our next FreightWaves event.
But the problem is there are so many industry events, it can be so hard to find the right one to invest your time and energy in. We at FreightWaves take your investment seriously.
Which is why we've brought together thousands of industry professionals in one city over 3 days to showcase all you have to offer.
Because your successful connections at an event like F3 move all of us forward.
Don't believe us?
Join us in June.
From the truckload quoting page within TIE-TMS, you can create a new shipment to instantly display your historical lane average alongside all of the market-leading rating intelligence tools. In just a few clicks, you can adjust the quote, add your margin, select your quote response template, and email an official quote right off to the customer from the same page. Request a demo today at tie-software.com to find out how TIE-TMS can optimize your quoting process.
Welcome back to FreightWaves Now, starting off your 10 a.m. hour with a check of your top stories. Daimler Truck is conducting a third safety recall of about 77,000 vehicles across 7 model years in the United States and Canada due to brake model corrosion that could cause pulling of the vehicle to one side of the road. In total, more than 475,000 units have been recalled. So far, none of the recalls have an associated crash with them. Less than 1% of the recalled models are likely to have the condition, but those include the 2022 Freightliner 114 SD, the 2017 to 2023 Freightliner Cascadia, and the 2022 to 2023 Western Star 47 and 49X series models. Egypt Air has taken delivery of its first Boeing 737-800 series cargo jet following a conversion from passenger configuration by an independent supplier. The company is now considering a new business arm, rebuilding the aircraft type for dedicated cargo at its own maintenance repair facility. The conversion kit was designed by Miami-based Aeronautical Engineers, Inc. and completed by Commercial Jet. The new configuration can hold 11 full-height containers as well as a smaller container on the main deck. Dry bulk shipping is off to one of its worst starts ever in 2023 with a collapse of the Baltic Dry Index. The BDI fell 530 points on Thursday of last week, down 91% versus October of 2021. The BDI is typically used as an indicator of global economic health. It has only been lowered 2 other times in history, during the first half of 2020 and during the 2016 downturn for dry bulk shipping. Dry bulk CEOs say that it has been an exceptionally weak start to the year with rates lower than expected. Some of the blame can be put on a lack of iron ore exports out of Brazil, which due to the repositioning of ships has led spot rates to dip $2,200 per day. WiseTech Global, the Australian-based developer of logistics software CargoWise, has acquired privately held Bloom Global for $414 million US. The acquisition will come from funds managed by Apollo, EQT, and other minority shareholders. Bloom manages intermodal containers and chassis on behalf of 6 of the 7 Class 1 U.S. railroads, ocean carriers, and other intermodal equipment providers. It is expected to generate revenue between $65 and $70 million this year. And Capilauer Marine Fuels and Lubes recently expanded into Harlingen, Texas to service more customers in that region. The fuels distributor opened a 20,000 square foot facility on 6 acres near the Harlingen Industrial Park, and it is expected to create about 20 jobs, including truck drivers and warehouse workers. The company's customers include car dealerships, oil centers, and trucking companies, plus customers who utilize the port of Brownsville, like shipbuilders and refineries. And for those headlines and more, you can head on over to FreightWaves.com. Give us a like and subscribe if you're watching us on YouTube, and a follow on social media. Head on over to tv.freightwaves.com for anything else you might need. Right now, we're going to toss things back over to Bill Priestley and Donnie Gilbert for our next carrier update.
And welcome back to our next carrier update. Bill Priestley with Donnie Gilbert. And of course, we know the trucking industry volatile, and week over week, you're seeing it here.
So this is change week over week, but for reefer only.
Okay.
So I've got in the blue and the red here is the markets that are changing up or down. Blue increase, red decrease. And then you see the shade here. These are volumes. So if we see a market with a big change, North Dakota, there's no shade.
Yeah.
Probably not going to worry about that.
Yeah.
It's not a market that we're really targeting. It's not a lot of volumes there.
Right.
If you go out there, you're taking a huge risk. Are you going to be able to find your freight out of there? Now, different markets, you look at, here in Missouri, a lot of shade, a little bit of blue. Well, we've got rejection rates that have come up slightly, and you got a lot of volumes in that market, which means volumes, when we look in terms of truckings and we talk about volumes are opportunities. Yep. You always want to try to stick your trucks in markets where that has a lot more opportunities. So, or roll the dice and go for the money in markets that may not have a lot of opportunity that are way up in North Dakota. So you choose what's best for your company. But we look around here, we see a lot of change here in the Midwest here. Missouri, Indiana, Ohio, lots of little blues, means rejection rates are climbing up 1 or 2 percentage points. We do see some that are falling down, southeast here, Savannah, Georgia here, and as some are climbing, some are going down, it's kind of making the rejection look pretty steady. But you always got to check this, Bill, because again, we have markets that are always changing. It's just that at the end of the day, they balance out to where you don't see a lot of changes in these rejection rates. So good amount to look at it every morning for reefer and dry van. A few I want to point out here, we got Memphis, we're going to look at that in our lanes of the day. Up here, hidden behind up here, Syracuse, New York, we're going to look at that one here in our lanes of the day. Go to the next chart here right quick. This is our head haul index. We're going to see Dallas in our lanes of the day because of Memphis. But I also like to look at this head haul index as well, because this shows us the balance of capacity in each market. When I see a blue, that means there's more outbound loads than there are inbound trucks. Now, if you see a blue surrounded by a bunch of red, Atlanta's not surrounded by a bunch of red, but at least it's neutral or slightly red. You may have trucks deadhead to that market and oversupply that market. But if you see a blue surrounded by blue, then you're going to have a market that's pretty well undersupplied with trucks, which can make the market rates increase. So we like to say here, run to the blue. So West Coast there, Fresno, Fort Worth, Atlanta, Harrisburg, Chicago. These are some good markets, and I always want to keep those in mind. So I'll choose one of these markets as well. I'm not going to tell you which one for our lanes of the day. And we'll look at it. We got a little bit of time here left. Let's go to the next chart. Now, I like to take, these are just our regular rejection rates, no change, no nothing, over volumes, except I changed it from markets to regions. Yep. And I like to see this because here we have the highest rejection rates. But this region here, the Mountain Prairie region, it's tough on volumes. There are a lot of low volumes in these markets out here. So I'm going to disregard this one. Southwest is a little bit tough right now, but look at the volumes here in the Midwest. A little bit lighter shade, southeast, a lot of volumes, but a little bit higher volumes here in the northeast as well. The two markets that I favor right now for reefer is going to be the Midwest and the Northeast. People hate the Northeast. I know why. I wasn't a fan of the Northeast either.
It's February, too.
It is February, but not just because of weather, how dense the population is. Sure. So a 300-mile run in the Northeast may take you longer than a 500-mile run in the Midwest. But this is one of the better paying regions if you want to make money. And I will show you that on that Syracuse lane. So the two regions run between or run in is probably going to be the Midwest and the Northeast. If I was a reefer carrier, I'd probably be running a lot in the Northeast. Maybe not with a new rookie driver, with a very experienced driver. There's a lot of targets out there to hit or hit you. But right now, you can't just run in these areas where it doesn't pay very well. You will be out of business. You got to chase the rates, Bill.
Yeah, if you're headed to the Northeast, make sure you're a vet there as well. Let's move it back over to Kaylee and Anthony.
All right, guys, thank you for that carrier update. We'll get one more before we're done here for the morning. Right now, we're going to welcome in Joanna Marsh, our rail rider, for another update on what's going on in East Palestine, Ohio, as they continue to clean up from the hazardous chemical spill with that Norfolk Southern train derailment. Joanna, thank you for being here. Any updates to this broad situation that we got over the weekend?
Yeah, so Norfolk Southern had put out an update on Friday, kind of talking about where they are in the cleanup situation. They said that it sounds like it's in phases, and they're working on getting the contaminated soil and water away from the site and disposed in an area that is a regulated area essentially. And so and they said that on Friday as well that that this cleanup process is occurring under federal guidelines and so it's not so there are rules and regulations out there that that dictate how you clean up these sorts of things, and so they say they're following those rules, and so that's where we are in the cleanup stage of things. Meanwhile, there's also there's just a lot of I guess political statements out there about the train derailment as well. Norfolk Southern's president and CEO, Alan Shaw, also went to the area, I don't know if it was just a few days ago, and met with the local community there. Meanwhile, you have Transportation Secretary Pete Buttigieg write a letter to Norfolk Southern, saying, we're going to hold you guys accountable to this, and not just the train derailment, but also just the cleanup as well. And so and then of course that's on top of other letters that were sent by congressional lawmakers. And I believe Senator Cantwell wants, to hold a hearing about the train derailment. And then there's possibly another hearing with the Labor Committee on so the Class 1 railroads and Norfolk Southern, and just kind of unrelated issues. So there's just a lot of attention being brought onto the railroads right now.
There's definitely a lot of hands in the fire right now when it comes to who's dealing with this, and now who, of course, is feeling the pressure to deal with it, especially after it's picked up a lot of traction on both social media, national and international media as well. When you're talking about the kind of coordinated response effort, obviously you go from the federal side, and we have now state lawmakers getting involved, but what about state governments themselves? What has the response been like from the Ohio governor, and has there been any coordinated response between Pennsylvania and West Virginia as well? East Palestine kind of sits right in that almost intersection. It's right on the state border of Pennsylvania and Ohio, and West Virginia is just down the border as well.
Yeah. I mean, I believe Ohio and Pennsylvania have been fairly active in their response, but also overseeing how the cleanup is going, and also overseeing how the monitoring for air and water quality, how that's going as well. You see regular updates from Governor Mike DeWine of Ohio, about how things are going at East Palestine. And so, so there's, obviously you have constituents there, residents there who, both in Ohio and Pennsylvania and West Virginia, who are still concerned about, what are there any sort of lingering effects to the chemicals, and so there's been a big effort, I believe, from public officials to try to address those concerns. It's tricky because even though there is that public effort, you still have you still have social media, and you still have a lot of perpetuating ideas about the conditions there, whether or not they're true or not. But as many people know, it's sometimes things can kind of get carried away with social media. So that's where we are in terms of the state leaders and their responses.
And Joanna, are there any hardened timelines or anything that we need to keep mindful of in the coming weeks or months here that are going to be kind of things to watch?
Sure. So the National Transportation Safety Board is still continuing their investigation, and they have said, from the get-go that their investigations take years to perform. And so I believe they said probably about a week ago that there's going to be like a preliminary report coming out soon. So probably the next, they said 2 weeks. So probably within the next week or two, there might be some sort of preliminary report. And then of course, this investigation they'll continue their investigation for the next several months. And is up to over a year, and so this will continue on, and that's kind of one sure thing to be on the lookout for. And of course, you still have the daily updates from Norfolk Southern or from EPA, from state officials about how things are going in terms of the cleanup and any other in terms of the cleanup.
So one of the stories that you've written about this situation has to do with a lot of the misinformation that's out there and kind of cleaning that up, as well as cleaning up the actual spill. Can you give us any updates on what types of information that's going out maybe isn't quite correct and what needs to be completely cleared up?
Sure. So USA Today has actually been publishing some articles, kind of like fact checking the situation in terms of like the dead fish and just other people's conditions. I think there was a post by the mayor of East Palestine, sort of talking about the drinking water, and you have like local and state officials like drinking the water and be like, look, see, it's okay. And of course, you have the comments after that, like, you're okay now, but how will you be like several months from now? So you have those constant reassurances from public officials, but not to like deride people on social media, but people are going to believe what they want to believe, and it's tricky too because this is an area. My parents are from West Virginia, and I actually lived in West Virginia for some time, where there's a tendency towards distrusting the government and distrusting, it's hard because the area has been traditionally been, I don't want to say neglected, but just not given the attention it might have needed earlier. And so you have. My personal opinion, kind of have a lot of baggage coming into this as well. So it's an unusual situation and unfortunate, of course, that the derailment happened in the first place.
Definitely sounds like there is a lot more to the story over the coming weeks and almost, months, if not years. Joanna, thanks so much for joining us this morning, and we'll be sure to follow up with you as this develops.
Great, thank you.
Thank you. Right now, we're going to head over to the wall because we have Kaylee Nix with another weather update.
All right, Anthony, thank you for that. It's time for our next look at weather, and we are talking about that storm that's developing across the Mountain West right now, but we're going to look at it bringing some liquid precipitation to parts of the Midwest and the Great Lakes that have seen a lot of snowfall so far this year. With it, that cold line going to be, again, that kind of like razor sharp edge between liquid precip and snow, but the majority of folks throughout the northern Midwest and into the Great Lakes going to be seeing that rain mix, not necessarily the snow. So let's check it out in Sonar Critical Events. We talked about those warmer temperatures across the area in our last look at weather, and that's what's going to let this storm continue to dump some pretty heavy rainfall from Kansas City up through central Illinois into the Peoria area just to the southwest of Chicago. Some heavy rainfall again just to the central parts of Illinois to the northeast of St. Louis, Missouri. Heavy rainfall amounts it's going to be centered kind of right through there. The southeast getting a little bit of a break when it comes to rain for this week. And with that, we'll see that developing across Oklahoma and then moving up through Arkansas into Missouri, up into Illinois by the middle parts of this week. So your rainfall forecast for the next 3 days, so this is today through your Wednesday, looking at most isolated areas getting about a ½ inch to 3/4 or so. Heaviest stuff from Kansas City up and through central Illinois going to be about 1.5 inches to 2 inches. Isolated heavier amounts are of course possible in these spots as well. But with this area, they haven't seen a whole lot of rain so far this season. It's mostly been snow, so flooding threat will be pretty limited as well as impacts to your drive time as well. So not a whole lot of impacts expected from this rain, just a nice, good early spring soaking for them as we move through the middle parts of the week and watch that storm start to develop. However, on the cold side of things, closer up to the Great Lakes, we will see again some possible icing as well as some heavy snowfall centered around those Great Lakes and up into New England. We'll touch on that a little bit later in our last look at weather. Right now, we're going to take a quick break and we'll be right back.
The 2023 Freight Tech 25 list is filled with meaningful innovators from across the industry who are helping shape what the future of supply chain will look like. Check out the full list of these companies and all the latest Freight Tech news at FreightWaves.com.
From the truckload quoting page within TieTMS, you can create a new shipment to instantly display your historical lane average alongside all of the market-leading rating intelligence tools. In just a few clicks, you can adjust the quote, add your margin, select your quote response template, and email an official quote right off to the customer from the same page. Request a demo today at tie-software.com to find out how TieTMS can optimize your quoting process.
Welcome to Drilling Deep. I'm your host, John Kingston. Drilling Deep is the place where we talk about oil and we talk about diesel, and you have to drill to get oil and you have to get oil to make diesel, so that's why we call it Drilling Deep. Drilling Deep drops every Friday on FreightWaves TV and all available podcast platforms.
All right, Anthony, it's Monday, so how about we do a little radio talk-in and talk about this week's features on a SiriusXM Drive Time with Grace Sharkey.
That's right. So Grace is a busy woman. Not only does she contribute to our editorial team, not only does she do interviews, but she also has our SiriusXM Radio, and that's going to be Monday through Friday.
Absolutely. We've got 5 to 7 Road Dog Radio, channel 146 on SiriusXM. She's got another great week on tap for this week. So for today, if you missed last week's Monday show, well, good news. You can catch it this afternoon starting at 5 o'clock. Tomorrow afternoon, you can catch John Kingston talking all about fuel and the Drilling Deep community. Plus, it's Thomas Tuesday. Thomas Wasson always joins for the SiriusXM show on Tuesday afternoons to go ahead and talk about loaded and rolling enterprise fleet and probably drop a joke or two.
That's right, and the fun continues throughout the week on Wednesday with Harish showing up. We also have Kevin Miles that's going to be on the show on Thursday, and on Friday, Michael Rudolph. And I hear she had a really interesting show last week for some of that recap around some of the logistics around the Super Bowl and some driver that helped out deliver some expedited stuff for Rihanna.
Absolutely. So go ahead and check that one out. Of course, you can find that channel 146 Road Dog Radio. That's 5 to 7 Eastern time. Also replays for you late night night drivers. That's going to be 11 p.m. to 1 a.m. for all of you late night truckers out there. And of course, you can follow Grace Sharkey on LinkedIn as well as up on her Twitter to find all of her updates and more. Grace and I will be back tomorrow for Great Quarter Gals at 3 o'clock if you missed her, so tune into that.
So she just doesn't stop. She has her newsletter. She has another article that she writes on a regular basis. She has the show Monday through Friday. Then she has Great Quarter Gals. I don't know where she finds the time.
Absolutely. And Grace always looking for guests to call in on the radio show as well, so give her a ring. She'd be happy to talk to you. We're going to go ahead and take a quick break, and then we'll be right back with more FreightWaves Now.
The 2023 Freight Tech 25 list is filled with meaningful innovators from across the industry who are helping shape what the future of supply chain will look like. Check out the full list of these companies and all the latest freight tech news at FreightWaves.com.
From the truckload quoting page within TieTMS, you can create a new shipment to instantly display your historical lane average alongside all of the market-leading rating intelligence tools. In just a few clicks, you can adjust the quote, add your margin, select your quote response template, and email an official quote right off to the customer from the same page. Request a demo today at tie-software.com to find out how TieTMS can optimize your quoting process.
Welcome to Drilling Deep. I'm your host, John Kingston. Drilling Deep is the place where we talk about oil and we talk about diesel, and you have to drill to get oil and you have to get oil to make diesel, so that's why we call it Drilling Deep. Drilling Deep drops every Friday on FreightWaves TV and all available podcast platforms.
Welcome back. It's time for our final check of weather for your Monday morning. We're talking about some light snow moving across the Great Lakes, which will eventually develop into some heavier stuff from the northern parts of the plains as that winter storm pulls up to the northeast. So let's take a look at the radar right now. We've got some light snow that's lingering across the upper parts of the Great Lakes into the Chicago area. Heavier stuff right now moving through Minnesota and into the northern parts of Wisconsin right now. So we do have winter storm watches up in place across Wisconsin into Minnesota. Winter storm warnings as you move out to the west further ahead. With that, we've got the Rochester area as well as the Minneapolis-St. Paul area expecting some heavy snowfall, several rounds of that today and into tonight as well. One round here moving through this morning, and then we'll see another round push through the afternoon. Behind that, another round expected to develop. With that, temperature is going to stay pretty cold up there and some heavier snowfall amounts expected as these snow showers are moving fairly slowly. You're looking at about 3.5 to 5 inches coming out of these storms. And of course, locally heavier amounts are always expected as well. More snow moving through southern Wisconsin too, developing outside of Madison. Going to be seeing that snowfall coming to the Milwaukee area and then eventually filling in across Chicago and up into the southern parts of Michigan as you move tomorrow on into your Wednesday. Further back back behind that, that's where we're watching that next winter storm develop across Montana and into the mountains of Idaho right now. Because of that, we do have blizzard warnings up in effect across the southern parts of Wyoming. This includes that I-80 corridor, as some strong winds and blowing snow expected to lower visibility all the way down to 0 miles in some spots. So just be careful out there the next few days. Make sure that you know when it's time to pull over and not drive through those blizzard conditions. Just take your time. Better to be safe than sorry always. That's it for the weather today. We're going to continue to watch it as we move throughout the rest of the week. Right now, we'll hand things back over to Isaiah for a final look at the social roundabout.
Welcome into Social Roundabout, everyone. I'm Isaiah Buchanan. And NBA All-Star Weekend got wrapped up last night with the NBA All-Star Game. But what really captured most people's attention was the slam dunk contest on Saturday night. And there was one dunker in particular who brought the spark back to the dunk contest, Mac McClung for the Philadelphia 76ers. Take a look at his first dunk right here. This is absolutely incredible. There's two guys. He jumps over both of them, grabs the ball, hits it off the backboard. Even Gabrielle Union is stunned, and she's married to a future Hall of Famer. Look at this. Over both of them, off the glass, reverse dunk. Absolutely impressive. Here's dunk number 2. I mean, this guy has got some serious bounce. This is like a reverse double clutch, not a reverse, but I don't even know. He's just doing so many different things in the air. Giannis's approval is there. And look, even the baby is stunned by the bounce that this man has. Here's dunk number 3, boom. Jumps over another person, hits a little hezzy move, and then hits the reverse dunk. I mean, this guy is going absolutely insane. I haven't seen somebody do this great in a dunk contest in probably the last 6 or 7 years. And this last dunk right here is about to be the icing on the cake. This one had me actually get up out of my seat. It was so good. Right here, he puts on his high school jersey, Gate City, comes in, boom, 540 reverse dunk, hits him with the Vince Carter. It's over. It's over. On the night, Mac McClung got 3 50s out of 4 possible tries, and I think on one of them he actually only got, he got a 49.8 on his average score. So, I mean, almost 4 perfect dunks on the night. This guy absolutely stole the show and has a bright future of dunking ahead of him. That's all I have for this edition of the Social Roundabout. Right now, I'm going to toss things back over to Bill Priestley with our roundtable.
And welcome into the roundtable. Bill Priestley here with you. And what would trucking be like in 2028? It's an interesting question to ask. It's an interesting thing to try and predict. And so we're going to go ahead and do it and ask Alan Adler and Thomas Wasson to join us, both of them logging in here. Gentlemen, thanks so much for joining us. I threw 5 questions at you guys to see where you thought trucking might be 5 years from now. And you guys came back with some pretty interesting answers. First off, what did you think of the questions before we get into your answers? Okay, Alan, you're first.
Well, I already told you, Bill. I thought they were very good questions. I don't think we can really give you answers that mean anything, but whatever. It's fun. They were good questions.
All right, Thomas?
I'm always about reading tea leaves. I haven't started my tea this morning, so we're going to get a little bit ahead with some prognostications.
All right, so let's move on to question number 1 here, which was, what are going to be the top 2 fuels used in 2028? And you all came up with diesel electricity for Alan and diesel and natural gas for Thomas. And I'm assuming on both fronts there, gentlemen, that diesel is still going to be heads and shoulders above everybody else in terms of consumption. Alan, you go ahead.
Yeah, for sure. Diesel, the infrastructure's there. It's what the industry uses, and it is getting cleaner. So it's not like it's the dirty diesel of the 80s. Electricity, probably because there's so much money going into it. I told Thomas I thought his answer was a good one but I'll let him answer that. But I feel like electricity probably will begin to have an impact by 2028.
Thomas, you went a slightly different route. What made you go with natural gas?
Well, thinking with the natural gas, just because every time I see a UPS truck deliver my parcels, they have the ones that are saying on the edges running on natural gas. And it made me think a little bit about how
You don't really see that very much. It's kind of the unsung hero, but I do think that existing infrastructure right now, in the near term, even by 2028, is going to still dominate as we flesh out things like for electricity, which I do believe will eventually become. There's still a lot of questions remaining about infrastructure, power, and how to make sure we can charge everything.
A lot of steps have to be taken before anything. Go ahead.
I think it's real important on natural gas. I agree with you if it's a renewable natural gas, because I don't believe that petroleum-based natural gas is going to do much more than it's doing now. You're seeing the number of stations actually fall rather than rise. You've got an interesting new business between Momentum Fuels and Cummins on tanks that will carry natural gas. But a lot of the infrastructure is moving towards renewable natural gas, which of course comes from things like animal waste.
Gotcha. All right, let's move on to question number 2, which was going towards the autonomous trend. What will be the state of autonomous trucks in 5 years? How much are they going to be used? And you said, Thomas, level 3, driver assisted, possibly level 4, level 5 tested in the Sun Belt. Alan, you said limited, only specific routes, only in the Southwest, and probably this long haul will be the primary, but some middle mile. Thomas, why did you go with what you went?
I was thinking about like Plus and a few other ones that have the level 3 architecture. And, looking at a practical application, if I'm a large fleet, obviously I'm going to be testing level 4 and 5 autonomous for like driverless. But at the same time, there are some very practical uses for, large fleets that have a form of lane control, lane assist, and helping with things such as merging and traffic. I do believe that for a large trucking company, we're going to see very pragmatic steps like that. But for full autonomous, I do think that there's still a lot of work to be done before anyone with thousands of trucks is willing to take the risk just from a safety and liability standpoint.
Alan, you seem to be a little bit more pragmatic in terms of just making sure the testing was obviously done, and your answer reflected that with going with a lot of operations in the Southwest.
Bill, let's talk middle mile and delivery like a Gaddick right now. They're already doing driverless deliveries. They're going to continue to grow that business. So I think from a pragmatic standpoint, that's where things will go. On long haul, I don't think there's any appetite for level 3, to be honest with you. Anything that keeps the driver in the truck cuts away at the whole business case for doing autonomy. We already have assisted driving, level 2 driving, and Plus itself is like level 2 plus, that kind of thing. But I don't believe there's going to be a real appetite for level 3. I think it's just too expensive to keep the driver in the truck.
Gotcha. All right. Let's move on to our third question. What was going to be the biggest issue that was going to be facing the trucking industry in 2028? And interesting answers from both of you. Alan, greenhouse gas regulations being tough things to overcome, basically pricing people out of the market. And Thomas, driver shortage still an issue and complications because of that. Alan, I can't disagree with this at all in terms of greenhouse gas emissions and being able to control them. This is still going to be a massive issue. Your thoughts?
It's tremendously expensive, and it's going to drive a lot of people out of the business, especially the owner-operators that make up, 70-80% of the fleet. They're not going to be able to afford these things, and I think it's going to drive them away. I do believe this is where the big fleets will get on board. Obviously, they will go with a variety of solutions, on short haul and regional. It might be electric. I think you will see more natural gas, especially renewable natural gas, either in hybrid or some other you've got a 15-liter natural gas engine coming from Cummins, which would be fine for highway. They've managed to work on the torque and the power, which are drawbacks to natural gas right now. But I think you'll see some of these things come in for the big fleets. I think we're going to drive away a lot of the small guys.
Yeah, Alan, you went with the technical, and Thomas, you went with the human element of this. Why'd you go with driver shortage?
It's a tale as old as time, Bill, and it's definitely a situation where, as much as I really enjoy reporting on the things we're seeing with innovations, we're seeing that, driverless trucks trying to replace the driver on long haul segments. These are very fascinating and exciting times, but at the same time, from a recruiting standpoint, it can feel a little bit frustrating if you're trying to recruit drivers because, the narrative that we do have right now is that well, we want you to join. We need you to drive, but we also may be replacing your job in like 10 or 20 years. So can you kind of drive for us a little bit, even though we may have to get rid of you, but we don't quite know yet? And so, I mean, this has still been an issue. Driver issues because of labor and working conditions. We have a 70-hour clock. You want to work 70 hours each week for the same amount of wage that you could be working in a relative construction or even warehousing or other positions if you decide to take it all out or look at how much per hour works. So there's a lot of questions that remain, and half of it is in relation to technology, and the other half is just trucking as itself still has not really addressed the fact we're working on compensation, but we still haven't found a meaningful answer to the lifestyle challenges of a very solitary job on the road.
Yeah, you make up some great points there as well. Go ahead.
I just want to say, and I'm not sure I'm a buyer or a seller on this one, but the idea of the driver jobs changing. If you can find a way to get those guys out of the seat for the middle mile, for that 250 or 300 mile piece of it, and then you put those drivers into the driving the final mile, now you have begun to address some of the things that Thomas raises in terms of home time and in terms of being able to work a normal day and that kind of thing. If
Quality
in fact
of life,
the
yeah. Absolutely. All right, let's move on to the fourth question. If you had some money now, if you invested today, what would you invest in that would have a return in 5 years from now? And you all said operators that can scale through technology, in a word, Cummins, for Alan, who's already mentioned that company a couple of times here. And then Thomas, avoid it. Go to an index mutual fund. I'll go with you first, Thomas. Is investing in trucking just a bit too risky right now?
That's like trying to ask a sausage salesman, what would be your favorite sausage company to invest in? It's the same principle. It's a very, very chaotic company. Given the business cycles, given the competition, given the fact that regulation can literally create new winners overnight. Look at the Motor Carrier Act of 1980. A lot of our large enterprise asset carriers didn't even exist before we had regulation. And we're going to see regulation coming again on the horizon in the next 5 years that are going to be addressing these autonomous trucks. So, I mean, it's a situation where right now, if you ask me to invest, I'm going to tell you in a mutual fund or like an index. Just put it on an index and follow it, because you're going to have a really hard time picking a winner this early in the race. We have some people who are edging out. I can always talk about first mover advantage or how catching up are incumbents, or we can even pull out Clayton Christensen talking about disrupting and innovation. But at the end of the day, like if you had given me $10 million and told me to invest, I'm just going to take the safe route and just go with an index, because I'm definitely not. As much as a trucking expert, I also know that trucking is extremely chaotic, and the best you can use them for, canaries in the coal mines, for larger funds and tracking macro movements. I don't think I've seen a situation other than maybe Yeah,
Bill Thomas he's copping out. You asked for a company. You didn't ask for an index. So his answer is a cop out. I agree with him. I wouldn't do it either. But if I had to do it, if he said you have to do it, then I like a company that has got its fingers in a lot of businesses. I also mentioned in there PACCAR. I think they are extremely well run. I think they are a company that, if you look at the last 10 or 15 years, you've done very, very well if you had invested $1,000, 15 years ago. But I agree. I think trucking is one of those businesses that probably isn't a place to play with a lot of money. However, there are operators that are doing pretty well and probably will do pretty well on an ongoing basis. So.
All right, we've got about a minute and a half left here. Let's go to question number 5 quickly here. What do you think is going to be the household names in 2028 as we move forward? Maybe not today, maybe up and comers. And you all said Wabash, PACCAR, Nikola, and BP, Alan. And then for Thomas, Tesla, Amazon, and Walmart. Mr. Watson, 30 seconds. Why'd you go with these 3?
Tesla, because I want to make my memes into dreams. And as much as we like to discount Tesla, they always manage to come up with something absolutely nutty. I think eventually the Boring Company will build trucking tunnels. Walmart and Amazon, because I think those are very two interesting ones. Walmart, look at their private fleet. Look at their push. Walmart's very fascinating in how they handle their internal transportation, because they want to be like Amazon. I'm thinking Amazon is the second one, because if there ever was an opportunity for a company that has a large logistical footprint to disrupt and transform, it's going to be Amazon. People can't keep up with Amazon because they're funneling it via AWS for server farm profits, and they're able to outcompete because of how they approach the problem. I'm going to say that a lot of this innovation in trucking, especially the trucking segments like middle mile, like Alan talked about, is going to be coming from a lot of these large shippers with private fleets who are going to be wanting to utilize the savings. But we're going to see laggards in terms of large, regular, publicly traded enterprise carriers.
Okay, let me catch you up right there because I've only got so much time left here. Alan, go. You got 30 seconds. Sorry, buddy.
Man doesn't know 30 seconds. I gave you a couple of names that I think, at least today, look pretty smart for the long play. When I mentioned BP, what I was speaking of is Nikola may be a name you hear today. I'm not sure Nikola survives as a standalone. I think down the road, it could become part of something like a BP, which you noticed last week, purchased Travel Centers, has purchased Amplify Power, and some of those companies. They buy their way into these technologies because it doesn't cost very much to do that, and they don't have to develop them.
Well, it's going to be very, very interesting. We'll have to reconvene February 2028 and see how you guys did. Appreciate your time, and we will come back. We'll take a break and be back after this with more FreightWaves Now.
Hey everybody, this is Thomas Watson, enterprise trucking carrier expert here at FreightWaves, telling you about my show, Loaded and Rolling. Now, it involves trucking topics for large carriers and even small ones that wish to be large. Anything that impacts trucking, you can get it there. You can catch us every Tuesday at 1 p.m. Eastern on tv.freightwaves.com. We do it live.
From the truckload quoting page within TieTMS, you can create a new shipment to instantly display your historical lane average alongside all of the market-leading rating intelligence tools. In just a few clicks, you can adjust the quote, add your margin, select your quote response template, and email an official quote right off to the customer from the same page. Request a demo today at tie-software.com to find out how TieTMS can optimize your quoting process.
Welcome back to FreightWaves Now. It's time for one final check of your headlines this morning. WiseTech Global, the Australian-based developer of logistics software CargoWise, has acquired privately held Bloom Global for $414 million US. The acquisition will come from funds managed by Apollo, EQT, and other minority shareholders. Bloom manages intermodal containers and chassis on behalf of 6 of the 7 Class 1 U.S. railroads, ocean carriers, and other intermodal equipment providers. It is expected to generate revenue between $65 and $70 million this year. Capula Marine Fuels and Lubes recently expanded into Harlingen, Texas to service more customers in that region. The fuels distributor opened a 20,000 square foot facility on 6 acres near the Harlingen Industrial Park. It is expected to generate about 20 jobs, including truck drivers and warehouse workers. The company's customers include car dealerships, oil centers, and trucking companies, plus customers who utilize the port of Brownsville, like shipbuilders and refineries. And Mediterranean Shipping Co. and Atlas Air are two of the main carriers transporting food, clothes, and medical supplies to the earthquake-devastated regions of Turkey and Syria. The MSC Aurelia is carrying 60 pallets of necessities and food supplies with the humanitarian aid collected by the MSC Group and its foundation. The ship will also remain berthed in Turkey to provide space for people disrupted by the earthquake, a place to sleep. MSC has also set up temporary containers to serve as housing for their Turkish employees who lost their home in the disaster. And you can find those headlines and more up on FreightWaves.com or in our FreightWaves app. Head on over to tv.freightwaves.com for the full FreightWaves TV experience. And as always, give us a like and subscribe on YouTube if you're watching us there live, as well as a follow on social media. We're going to toss things back over to Bill and Donnie. They've got our final carrier update of the morning.
And welcome back for our final carrier update of the day. And let's do some lanes of the day here, Donnie.
Yeah, so today we're looking at reefer, so remember to turn your reefer on. Be rough kind of pulling up to a ship or not have your reefer on.
Yeah.
It will not load until that reefer is cold. So we'll pull up here. We saw Memphis hit the blue marks on a couple of those maps.
Right.
So I'm going to start out of Memphis. I'm going to run down to Dallas. I am not a fan of Dallas. Dallas has been a tough market for dry vans, especially. So it's been very cheap coming out. Even though it's seen some signs of changing, the rates coming out of Texas have been a lot lower than what I prefer. But that's me. You run your own company, you have to make the decisions. That's why we give you the market dashboard. But we run Memphis down to Dallas, and for a 453-mile run, not a bad run at $3.15 a mile. It's hard to find freight lanes right now that are paying better than $2.50. The average is $2.41. So the daily index is at $2.49, and you see how much it came up. So finding these lanes are getting a lot tougher. What do you prefer? You got to make a decision. Do you like the 200-mile runs, where your truck can go out and return to the market same day? Do you like 450, 500-mile runs where you go out and deliver, pick up the next morning, come back? Normally that 650, 750, 800-mile runs are not liked because it takes too much time with the new hours of service.
Sure.
Or do you like those long hauls that are 2,000 miles? Well, the long hauls that are 2,000 miles, you can take some of these rates that are down to $225 a mile and make some good money because you're not stopping, loading, unloading, reload. You just go, and you can really lock on that revenue per day on your truck. So Memphis to Dallas, pretty good lane at $3 a mile for reefer at 453 miles. This would be something, if I was a carrier, that I'd be interested in. If I had to maybe take a contracted lane from Dallas to Memphis and then return on this. But let's click our little double arrow button and see what it pays Dallas back to Memphis. It's still not too bad. It's come down a lot, but it's not much below that average. It's at 282. So for reefer, this is pretty good. Well, still well above that NTI. So I'm not disappointed at all, really, if you're running this lane round trip at a spot rate. But if you were locked in, even if you're locked in to Memphis and your return rate from Dallas to Memphis was 282 as a backhaul, you're still in really good shape. Let's bounce over here on another lane here. Kansas City was my top secret market here. We're looking at Kansas City headed into the big city of Chicago, rolling in there at $3.06 a mile. Again, we found another lane that's over $3 a mile, and it's again a 500-mile lane. I like this rate, but it depends on what you're going to turn and burn on headed back. So hit our double arrows and say Chicago back to Kansas City, still at 314. Again, I don't care if you're running spot rate or contracted rates. This is a pretty good lane still, given the fact that a lot of these markets have deteriorated rapidly, which you see a lot of these down trends. But if you look back at the regular trends, we're still right and kind of in line with those. So I really like these lanes that you can run on. Now, as I said before, if you want to make the money, you got to run in those areas that nobody wants to run. There's reasons they don't want to run there, and that alone is what tightens up capacity. So let's look at our next lane here, and it's Harrisburg, PA, the Beltway, where a lot of freight, it's a freight hub, it's a rail hub. They got a lot of warehousing in Allentown. This is where freight picks up that goes into the Northeast. And we're going to run up and over to Syracuse. Headed in there, $4.72 a mile with ranges from 468 to 512. So you can get almost $5 a mile. Now it's a short run. It's only 250 miles. So you could actually probably make one turn per day possibly if you timed it right and got unloaded and reloaded quickly. But if you just ran it one direction at $5 a mile, you're looking at, $1,200, a day here for one direction. That's good money for revenue per truck. But what if you could take that and maybe you had a drop-in hook, or maybe you had the timing lined up, which it's very possible, where you left early in the morning, got up there, loaded, reloaded, and came back. Let's hit those double arrows and see what Syracuse back to Harrisburg is. $5.48 a mile. So if you can make $1,200 going up and you can make a little bit more coming back, you could put over $2,000 a day revenue on your truck. For a reefer, this would be a good lane if you can make it consistent.
But you got to go where people don't want to go.
People don't want to run. Now, maybe you could contract that a little bit less, but keep it more steady. Who knows? But use your market dashboard and figure out these lanes, figure out what's best for you.
Yeah, it's going to be interesting. That's a great piece of advice there to go to the Northeast if you can.
If you can.
If you can. All right, let's go back to Kaylee and Anthony to wrap up the rest of our show.
All right, y'all, thank you for that. And we're done here for your day on FreightWaves Now. But we've got plenty more coming up for today, and then a really exciting week for you here on FreightWaves TV.
That's right. In just about an hour, we're going to have, of course, What the Truck with Tim Dooner himself. And a little bit later on, we'll have Mike Baudendistel, you heard from a little bit earlier on in the show. He'll be back with the Stockout. But this is the final day to get registered before we get into Global Supply Chain Week. There is still plenty of time, so you can get registered and, of course, get yourself eligible for one of our giveaways.
When we kick off tomorrow morning, it is Maritime Day here for Global Supply Chain Week. That starts live at 9 a.m. There will be a short little FreightWaves Now embedded into your Tuesday and your Wednesday of Global Supply Chain Week. So make sure that you head on over and start watching with us at 9 a.m. tomorrow morning. Following that, of course, we will have all of our keynote speeches and our fireside chats for the day. And if you miss any of those, you can find them on demand following the event on tv.freightwaves.com. We'll see you guys tomorrow morning at 9 a.m. for that first day of Global Supply Chain Week. Go get registered.
But, is a hot dog a sandwich?
Oh, okay.